Hey everyone, welcome back to today's video. I am Willie and today I'll be bringing you this topic called 3 hacks that you should do when you analyze your trade. So sit back, relax and enjoy this video after this. So normally when you try to trade, you will be like, how should I actually analyze this trade? Some of you might analyze it from a smaller time frame, some from a bigger time frame. Some of you might analyze it in terms of recent movement, breakouts or rebound and other stuff like that. However, there is actually a few hacks that you can incorporate it into your daily trading in order to further emphasize your confidence in placing a trade. And in the end, you might eventually profit. So, one of the 3 hacks that I'm going to talk about right now is price action. Why I say price action is important is because when you look at the graph right here, you can actually see there's a lot of price action going on. Price action in terms of breakouts or rebound, or even the shadows that has been formed for the past few periods, or even few days or few weeks and such. So let's actually dive out from this 4-hour chart and look at daily chart for a minute. As you can see here, why do I actually emphasize to look at price action is because sometimes price action can give us certain hints about where it's going to head next. So for example, right now we're going to look at this price action over here with these 3 candlesticks. As you can see, these 3 candlesticks actually shows that it is trying to break out from the support level at around 0.9590. However, when it ever tries to break out from this level, you can actually see that it has formed a few candlesticks with a longer shadow in between one another. So this price action right here actually shows that the forces to push it downwards is actually lesser than the force that is pushing it upwards. So what does this mean is that it is actually harder for you to sell due to lack of forces from the top to the bottom. So in terms of price action, you can see here, this actually means that the bulls are actually much more stronger than the bearish momentum. So one of the reasons why you should focus on price action is due to this. Another price action that you should be looking out for is in terms of breakouts. Now, sometimes breakouts can be tricky because you might see from certain time frames, it has actually closed above a certain support or resistance. However, when you look at it in a future point of time, it might actually retrace back down or rebound back up and does not follow the trend after breakout. So as you can see right here, EURUSD has actually tried to break out from 1.0745 around this area. However, when it closed this candle above this level, you can see that it has instantly closed back below 1.0745. So this kind of fake breakouts would actually occur. So what I can say is that you can actually wait for a few candlesticks to be formed before you place a trade after a breakout. So what you can do is maybe in the future, when you saw a breakout, do not actually put your trade into that moment yet, but instead wait for 2 or 3 candlesticks to be formed above certain support or resistance level before you place your trade. Now we're going to look at second hack, which is looking at bigger time frames rather than a smaller one. So why do I actually emphasize to look at bigger time frames rather than a smaller one is because in smaller time frames, you will tend to see a lot of noises in the graph itself. Like right now, you are looking at H4 of EURUSD. As you can see, when you draw a support or resistance, let's draw a few here in the graph itself so that I can show you what is the difference by looking at H4 as compared to maybe a daily chart or even a weekly chart. So from H4 itself, you can see I have actually drawn a few support and resistance, as you can see right now. So when we zoom out from H4 into, let's say, maybe daily, you will actually see that, hey, did I actually draw that much of support and resistance previously? But yeah, this is actually how it looks like. So the support and resistance that you actually drawn on the smaller time frames is not relevant when you zoom out into bigger time frames. That is because of noise. Because in smaller time frames, price action tend to create noises, and it will create smaller or unimportant, or maybe not such significant type of resistance and support. What it means is that this support and resistance are not strong enough, or it is not significant enough to be contributed into analyzing. So what I would suggest is to actually look at bigger time frames if you are looking to trade in terms of a midterm or longer term, is to look at daily or weekly charts, because from daily and weekly charts, the resistance and support that they actually tend to create or to form is actually much more stronger when you compare it to a smaller time frame. So as you can see here right now, I'm actually drawing a few resistance and also support in the daily chart itself. So these are the few key strong support or resistance level that has been formed throughout the past few months. So when you actually zoom in back into H4, it is actually quite significant and can be applicable when you zoom it in, because it is one of the stronger ones that is actually being formed. So this is the second hack that you should actually know. Now, for the third and final hack, it is to actually utilize an indicator. Now, what actually is an indicator? Now, as you can see here on our trading view, when you click on the indicator itself, there's actually a lot of indicators that is actually present throughout this system itself. And what I would say is that indicator is actually a tool that help you to reinforce your confidence in terms of trading. Sometimes maybe certain people will actually only rely on price action when they analyze them or when they are executing a trade. However, some of them might feel that, hey, maybe my analysis might not be correct, or maybe it has flaws in it. So how do I actually re-emphasize my confidence that my analysis is actually correct or true to its form? So one of the ways that you can reinforce your view on certain instruments or the price action is to utilize an indicator. An indicator is there to actually help you to solidify your analysis into a much more higher level, so that it will give you confidence that, oh, this is actually might be true, or it might be something that might turn out to be true when certain breakouts or rebound happens. So indicators, we have a few. Some which I would recommend is to look at MACD, because MACD is actually quite straightforward to be used. And another one that I would actually recommend of using is moving average, because moving average has been one of my staple indicators throughout these few years of me trading. And I would actually use like 200 moving average or 100 moving average in order to determine my trades. So this is a few that I would actually recommend on using. However, using indicator does not mean that it will provide you with 100% of accuracy, because it is still a tool based on past price movements. So it is based on historical data that might not be repeated in the future. So use it with caution. And that's all for today on 3 hacks to analyze your charts. In case you want to know more, please do check out our channel and click subscribe button if you want to get notified for future videos.